Let's move on and bring on board another management, and we have the management of Godawari Power joining in with us, Mr. Dinesh Gandhi, Director of Godawari Power and Ispat this morning. Thank you so much, sir, for joining in with us this morning on ET Now. And numbers, that's what we're going to start talking about as well. Numbers have been impacted on a year-on-year basis this time when you look at it due to the lower volumes and the fall in realization. So do you believe that the worst is over in terms of the demand impact, and now that is behind us, and that we could actually start seeing a volume uptick in the coming quarters for the company?
Thank you for having me on your show. See, if you compare the number on YOY basis, the FY22, till June was an exceptional period when the iron ore prices in the global market was very high, and therefore the numbers are not comparable on normal basis. If you compare on a last 3-year average, then we are doing much better than what we did in the FY21 on a comparative basis. And our volume in the current quarter, especially in the pellet, has gone down because of the maintenance shutdown which we had taken in the plant. So going forward, whatever volume loss which we did into one quarter will be covered in the rest 3 quarters. So our volume on year-on-year basis will be in line with our guidance.
Right,
and, Yeah, and if you see our performance on quarter-on-quarter basis has substantially improved. Our EBITDA has increased by 36%. Our operating margin has increased by 23%. So, overall company is doing much better as compared to a quarter-on-quarter basis. But, the last Q1 of last financial year was an exceptional quarter.
Harsh also joining in. There's been a sharp increase in global iron ore supplies, right? Plus, there's also been lower than expected demand pickup, especially from China. Now, how does this impact the overall outlook? China's policy support to housing, infra, do you think that will spur iron ore consumption? How should one look at it?
See, so far as India and China consumption and the global market supply is concerned, so far as Indian prices are, competitive as compared to the global markets. But in case if the global market prices go up, the prices in India will go up. But if the global market prices go down substantially, there is a benchmark of Indian pricing because of the auction of mines which has taken place in 2020. March 2020. So the iron ore prices in domestic market is more or less at a lower band of last 2 years. So we don't think that excess supply, because India is not importing iron ore, and the landed cost of iron ore, if imported India, will be higher than the domestic prices.
Right. So when I'm looking at it, your margins have seen a contraction on a year-on-year basis. Now, how have the raw material prices trends been across the segments, and what is your outlook in terms of the spreads in the coming quarters as well then?
See, so far as iron ore prices are concerned, we are not, so iron ore is, there are two major raw material. One is iron ore. Iron ore we are not impacted because we have a captive iron ore mines. So our, margins are impacted by the, volatility in the finished product prices. But definitely the coal prices have definitely gone down, and coal prices have gone down more than 40%. So the impact of the coal prices reduction will come in from Q2 onwards. But at the same time, the finished product prices have also gone down. So we hope to maintain the margin at current level in the, going forward in the current financial year.
So, and you've achieved nearly 30% of your guidance for sponge iron and rolled product segments. How should one look at your FY24 guidance in this context, especially with regard to other segments? Are you also confident of meeting your overall guidance for FY24?
We are confident of meeting our overall guidance in terms of the volumes. But when it comes on the pricing, it depends on purely on the market conditions and the volatility in the pricing. But volume guidance, whatever we have given, we are confident of achieving the same.
Right. So I also wanted to understand what your current cash position is. You had around 800 crore of cash at the end of March 23. What is your current cash position? What are utilization plans, and how are capex plans really playing out in all of this?
See, our cash position is approximately around 500 crore as of now. We had 800 crore in March, but then we did, buyback in the month of April. So about, some cash was utilized there. And going forward, in the current year, our capex plan is very normal, more than, about 150 to 200 crore for maintenance capex. But our major capex will start once the environmental approval for pellet plant and the integrated steel plant plus the mining expansion is received. So till then, in the current year, and the capex will start only after the approvals are received. Our current year capex will not be more than 200 crore.
Right, sir. Thank you so much, for joining in with us and today on ET Now.